what's up folks? This is Faris with Trade with Tex, and today we're going to be talking about why 90% of traders fail and how you can avoid that altogether and be the 10% that actually makes it and builds their wealth, okay? Now, we're not going to be talking about getting rich quick overnight. We're going to be talking about systematic things that you can do to build your wealth and build the right mindset to trade for a living. So whether you're a day trader or swing trader, this should help big time, okay? Also, if you are not subscribed to the channel, check it out. We got a bunch of educational videos. And if you're a member or not a member, doesn't matter. I posted a link in the description to all of my notes for next week's chart prep. So what stocks I'm watching and what setups I'm looking for. I normally make that on Sundays. Today I'm going to make an educational video and just link that in the description below. All right, it's in a Google Doc with a bunch of charts. Okay, now let's get into it. Let's talk about why 90% of traders fail. Pretty crazy statistic, and I'm sure you guys have heard it, but the big point being is that we're not talking about necessarily 9 out of 10 just losing money. We're talking about 9 out of 10 not making enough money to keep their accounts active, right? Which basically means just not screwing up. Point of this video is how not to mess things up and to lose all your money. So the goal here has to be realistic, right? You want to be the 10%, not the 1%. That's the misconception that people always have. When traders are posting, Lambos and big wads of cash in their monogrammed robes on Twitter, it kind of misleads people. And, I've had plenty of 100% gainers, 1000% gainers, but you don't see me doing that on social media because that's not an accurate representation of what it's like to trade for a living and be the 1%. Your goal should be being the 10% before you try to be the 1%, right? Your goal should be, hey, how do I stop losing money? How do I make a little bit of money every day? And then you turn that into a source of income, okay? So don't try to be the 1% that have everything figured out after messing up for 10 plus years. Try to be the 10%. Be realistic with your goals and also be efficient with your time, right? Big part of that is the timeline for success here. The go-to quote that everybody says is, you need to put 10,000 hours into something before you are a master, right? Before you can do that either for a living or as something that you have conquered, basically. So in this case, what that amounts to, if we actually run the numbers, I think it's like 8 hours a day, 5 days a week for 5 years, right? That's kind of roughly what it is. So it's basically another full-time job for 5 years in order to master trading. I think that's a little bit excessive, but it's also pretty realistic. And once you understand that, you realize that the way that you should be digesting information and applying it, because that's how you learn, right? You learn something and then you apply it, is basically on a day-by-day basis, right? You have short-term memory and you have long-term memory, and this right here should be going every single day. So every day that you are not in the Trade with Text chat or looking up YouTube videos or making notes for yourself and watching the markets, that desk time is priceless, and that's going to eat away gradually at your long-term goal. So understanding that it takes longer to build your wealth, not just in a year, right? It could be more, and then building towards that day by day, okay? The other part of this is a lot of traders just get off on the wrong foot. This actually is a pretty misinterpreted sentence that I use a lot in the chat room. Basically what this means is I've started off so cold that I don't ever want to trade again, right? I suck so bad at this that I don't ever want to do it again. Or let's say I got lucky. Let's say I started investing when GameStop went to the moon and I made a killing. And that's kind of what I'm seeing from a lot of new people that come into the room. They say, hey Faris, I made a lot of money on the run up and I lost a lot more when everything dumped back down. Getting off on the wrong foot means that you either started off real hot or real cold, and you have a misconception of what it's like to trade for a living, and that hurts you, okay? So in order to avoid this, right, just forget what you know and practice something consistent, right? Have go-to stocks, have go-to setups, and do something every day that makes you money instead of just trying to trade what's hot. Okay, now this requires forming a system, and this is the big part. This is the most cliche crap that everybody puts out there. Well, you're not trading with the system, son. And that's a pretty logical thing for a mentor to say to somebody who's learning, but it also doesn't help because that is so complex. A system is a bunch of moving pieces that just saying that, you're not using a system is a pretty general thing to say. However, a lot of traders don't. A lot of traders just use one aspect of this, but they don't have everything clicking, right? And I wish I could go back to my first, aha moment where I thought, oh my God, if I use the MACD with these other moving averages, I'm unstoppable for day trades, right? I wish I could go back to that when it lined up because that's a good example of building your system, right? But the bottom line is you have to have a routine, right? A lot of traders that really start to make money will give back gains because they don't know when they need to stop trading and they don't know how to recognize what's significant. For example, right, one thing that I do, if we have a big down day in the markets, right, we're dropping, I tend to look at the 15-minute time frame and the 1 hour time frame a lot more than I usually do. That's a routine, that's a basic adaptation that I make that gives me a competitive advantage versus the people that are just zoomed in on the 1 minute and the 2 minute and the 5 minute that refuse to look at the bigger picture, right? It's a basic routine that I have that when that happens, when A happens, I do B, right? When B happens, I do C. These things sound counterintuitive, but they help, okay? And you need to have these laid out. The biggest parts of your system, though, are all gonna boil down to go-to time frames, go-to tickers, go-to setups. What I mean by that is you have to have a system that is based off of data, right? For me, I know what time frames work best. For quick day trades, I use the 5 minute a lot, right? And then I'll also use the 15 minute and the hourly. But for different tickers, I'll use different time frames that I know work better for them because I've mastered them, right? You need to have these laid out, test them out, see what works for you, and you need to have a go-to list of tickers, right? That could change, but it helps you master how these stocks move and gain a better understanding of how you should be entering and exiting. And this is why, and I'm sure this is going to resonate with a lot of people on YouTube. This is why a lot of you guys find yourself in big ruts, right? Where you make a bunch of money and then you lose a lot. It's because you're not being consistent by trading the same stocks. You are literally going on Google or Twitter to find what's hot versus what's going to make you money. And you want to avoid what's hot and you want to go towards what is consistent, right? That's going to give you a source of income instead of temporary wealth, okay? Last part of that is go-to setups, which is pretty basic, right? It basically says, if I am actively trading, what is my go-to strategy for this type of momentum? So let's say we have a high momentum stock, right? A runner, a penny stock runner that's exploding, or an altcoin, right? We can even relate this to crypto. If it's exploding and it's on day one of the run up, I know what kind of strategies I have to use for this stock, right? So for me, one of the go-to ones that I've talked about a lot in my videos, just basic bull flags, right? Stock runs up, consolidates for a little bit. There's your bull flag, right? You got the pull, you got the flag itself, and we play the breakout, okay? Basic strategy that I know for a ticker that I should know very well, right? And on a time frame that I know well. If I can check all three of those boxes, I'm not just throwing darts. I know what I'm doing, right? So having go-to time frames, go-to tickers, go-to setups goes a very long way. And again, that's just a basic example of one of mine. Okay, last part of this, and this is kind of a misconception as well, but basically you need to know how to find stocks on your own. If that's even piggybacking off of somebody else, it sounds hypocritical, but that does help when you're getting started. Like, for example, my YouTube videos should help you find stock picks, and all the time, that's why I'm mainly on Twitter. It's to talk with other experienced traders and see what stocks are in play, right? So whether that's scanning, whether that's keeping a list of go-to stocks and then scanning in that list for what is setting up, right? Or just a matter of, again, being in the chat room or using Twitter as a resource, using your resources to find what's in play and then trade that. The only issue with this is if you're finding your own stocks, you might have to be more flexible than what you're used to. So for example, I really loved stocks when I first got started, specifically penny stocks. Now I would say that my best consistency, well, I wouldn't say I know because I've ran the numbers. I'm most consistent with futures, and I'm most consistent with the S&P. That's my ticker, and that's my type of ticker that I'm most consistent with. So I became more flexible. I said, you know what, futures seem to be a good money maker, same with stock options, so I learned those. But this requires learning one thing at a time, so don't overwhelm yourself if you're just getting started, okay? But more experienced traders, be flexible, right? Learn different tickers, learn different trading styles, and then use a piece of that for your own strategy, okay? Now, this is easily the biggest part of it. Once you have a system in place, because the system itself is just getting to where you need to be. After that, it's just maintenance, right? For example, if I want to build enough wealth to buy a nice car, and I buy that car and I drive it, I'm enjoying it, that's the goal of building a system, right? After that, I need to maintain that car. If not, it could still fall apart at any time and I could lose that entire asset. So it's not a matter of building your wealth, but keeping that wealth and protecting it. Okay? This is why traders always say cash is king, right? All those cliche statements of, oh, I'm in cash going into the weekend and whatnot. That's knowing when to trade and when not to trade, but it's also a basic risk management tactic, right? Most of your job after you've built a system is just managing the trade and then managing yourself, right? Making sure that you're not the one screwing up, because we are not computers. We make mistakes. Right? Our brains are wired to do basically everything the opposite of what is successful in trading, right? So, for example, if I'm on a hot streak for the day, I've hit a bunch of different trades, the average new trader, when they do that, they're going to keep trading. But for me, I get a little bit cautious and go, oh, now I need to pick the A1 setups. I can't get excited and just keep trading this frequently because that's going to burn me. Okay? But in terms of managing risk, we have a lot of videos of this on the site as well. But basically, you need to define early what percentage of your portfolio you're risking, right? Per trade, but also altogether. And then the other side of this is how to use stops and how to know when to cut your losers, right? Cut losers, but also take profits, basically. Those are the two big things. So not taking a big loss, that's a huge deal, right? You can never take big losses. There's no room for that. And then getting in the habits of really just taking profits throughout the day, okay? Whether it's on an individual mover or all together. Now, managing risk is a really broad topic, so I want to talk more about, because that's something that you just need to put in the time for, right? There's no secret sauce that says, oh, 1% stop will always be best. It's what works for you. So you need to figure that out. Managing emotions is really such an early thing, but it's one of the issues that is recurring. Like, it always comes back to bite me in the ass. And the big thing is, whenever I'm getting excited, this is a rule that I use, and it sounds so silly. Whenever I get really hyped up or excited because I'm making a lot of money or I'm right frequently, you have to think of this statistically, right? When that happens, you should probably take a step back and sit down, because if not, the markets are going to smack you around. Not every day is going to be a home run day. You need to realize that. And when you do have a home run day, you got to protect that wealth. So managing emotions of when to get in, when to get out. Did I sell too early? Did I miss the train? Oh my God, how could I make such a stupid mistake? These basic things can be managed with self-awareness. I really don't think there's any successful trader out there who does not have good self-awareness. And that's where the entrepreneurship part comes in. If I'm the big boss, right? I'm managing my business, my portfolio is like a business. If that's the case, I'm fully responsible for everything that goes on. I would like to have an idea of how the clock is turning, right? How these wheels are turning and how I'm thinking the way that I'm thinking. So knowing that I start trading more when I heat up told me to slow down my trade frequency and cool down when I'm starting to get hot. Knowing that losing streaks don't last forever because my system works. knowing that I just need to trust the damn chart instead of going with my gut every time, right? Those are basic things, self-awareness, that I've really learned throughout the years that have helped me grow when I've plateaued or even gone down, right? Not just my wealth, but me as a person, okay? And if you're not in check, your trading's not going to be in check. So managing the trade, big part of it. The other part is managing emotions and just being self-aware. Okay, last part of this so I can wrap it up and keep this short and sweet for you guys. These are things that I just highly recommend that you're going to need for your trading at one point or another, and it definitely doesn't hurt to just build these habits early. First things first, make a damn trading journal. Cannot emphasize this enough. You know, I got a couple of links that I could share if you guys want. You can comment and let me know if you need that, or just comment on Twitter, right? Tweet at me at TradeWithTex, whatever. But basically, there are a lot of useful links out there to building a trade journal. And all this does is it gives you data, right? It gives you data to work with of what you did right, what you did wrong, what worked, what didn't. Those are 4 things that I just listed that are all different, right? There's right, wrong, what worked, and what didn't. And the basic way of thinking of that is, this is what I did right, this is my strength, this is where I went wrong, this is my weakness, this is what happened in the markets and I took advantage of it, and that will probably happen again. This is what happened and didn't play out, right? It could have played out, it could have not, and then eventually you learn from that and realize that, for example, if the S&P goes up 1% overnight, right, and I traded at the open before it gave back some of those gains, I now know that I did something wrong, and this is something that doesn't work for the markets. They don't follow through after they gap up 1%, usually, right? Journal helps you solve that. So basic journal of saying, you know, here's a Google Doc or a Word document. This is what worked and what didn't, and here's a chart with an actual picture and an arrow to support it. This takes 5, maybe 15 minutes at the end of the trading day. So instead of working till 4, work till 4:15 and get a competitive advantage. Okay, data doesn't lie, and you can lie to yourself. So trust the data and not yourself. All right. Last couple things: be curious, be a sponge. Once you start thinking that you know everything, you're going to get smacked around. And that's the big quote, you know, that new traders will always be humbled by the markets, right? Once you start thinking that you are doing well and that you got everything figured out, somebody else is going to get a competitive advantage because they're actually trying to constantly progress, and that's going to put you down a couple of notches, and you're going to lose your edge and you're going to lose money because of it. Okay? Not necessarily going red and bleeding money, but making less money because you are no longer trying to learn. So that means every day, try to learn something new. Try to see where you can improve. If for some reason you can't improve that day, that's okay, but at least you checked. Okay? Last part of this, 3 basic good habits to build early, just some simple tips. Take profits when you got them, right? If you find that you're exiting too early, that's okay. It's better than a winner becoming a loser. No big losses at all. That will blow up your account within just a couple of trades. And patience, not only when you're in the trade, but also when you're looking for a trade. Wait. You might even have to wait days at a time before you start trading, but if that's the case, wait. At least you're comfortable with it. Okay? Either way, this is a pretty general webinar. I did want to say that these are all things that you have to set in place, and the whole point of this is that you can roll through this and go, hey, you know what? I'm not managing risk as well as I should be. Or you can say, hey, I don't have go-to time frames. I just have 1 or 2, but I should really get that set up. Or you can say, man, I don't have a very good trading journal, or I haven't put anything in mind for a while. I should get on that. Any one of those things will help you considerably, and that's the point of what we just discussed. Okay? So go out there, be the 10%, and if you want to build towards being the 1% eventually, join us in chat, tradewithtex.com. We got a free week. It's on the site, right? Just go to tradewithtex.com/sign up. Should have put that full link in for anybody who's interested, but it's sign up. That's a dash right there. Okay? And you can join us for a free week before you get started. Okay, no credit card, none of that crap required. You just jump in, watch the webinars, and enjoy yourself. Okay? Anyways, thanks for watching, guys. Hope you enjoyed, and good luck being the 10%.